I don't know. In my opinion, longer term, and when I say longer term, I'm talking about, say, a year, the next year to 3 years. Let's say that the Fed does continue to cut rates. At some point in time, foreigners are going to look at it and say, hey, wait a minute. I can get, I'm not sure if this is correct or not. I think it is. I can get 4.5% on a German bond. Why would I accept 3% or 2% or whatever on an American bond? And what that's going to do is it'll weaken the dollar, and it'll make it harder for the U.S. to borrow and fund the 1 trillion, 2 trillion, whatever the deficit happens to be. Those deficits are going to be harder to fund without higher rates. So, I've been asked this for the last probably 6 months, and it's my guess is the next huge move in interest rates is going to be up and not down. And it's going to be up because at this point, there's zero risk premium. If you look across the world, there's no risk premium. There's some countries like Greece that pay less in interest than the U.S. And yet there's other countries, for example, I believe Russia pays, if they had to go out and borrow in the Forex markets, if they borrowed, they would certainly pay more than what the U.S. is paying. But Russia's 17% debt to GDP? And we're 130% debt to GDP. Which one has more risk? So what I'm getting at is I think we're going to see higher interest rates based on a real risk premium being placed on the different debt securities worldwide.
That's another great point, because I do also believe that the Fed, they are going to have to at some point begin raising again. And it's interesting because the current administration, they want those rates to go down, but the market may be telling the Fed, we want the rates to go up. So I'm curious to see, how is this going to play out if the Fed and the administration aren't seeing eye to eye again?
It'll play out like a comedy/tragedy, because you've got Trump. The guy's a real estate guy. The guy wants, he wants to borrow money and pay nothing. Who wouldn't? It just, if you could borrow money for free, why wouldn't you do it? That's the comedy part of it. The tragedy, I think, is that, the first thing that's going to go by the wayside is if the Fed were to acquiesce and lower rates like Trump wants, then that's proof that the Fed is not and never has been truly an independent entity. And one other thing, I think the whole yield curve worldwide is going to go higher, and that's just based on the simple math that the world collectively is now, if you look at the total amount of debt outstanding, it's over 300% of debt to GDP. So the entire world is awash in debt. And I think, the way to, and I don't want to use the word mitigate, but the way to compensate for that is that the lender gets a higher interest rate and the borrower has to pay a higher interest rate.
That kind of leads to my next question here with the inflation. Do you think it's under control? Do you think it looks like it may be starting to simmer and come back?
I think what we're seeing is inflation of the things we need and deflation of the things we have. You look at I just said, the commercial real estate market. Those commercial properties are down, 40, 50, 70% from where they were just 5 years ago. So you're already starting to see deflation in that market. You're already starting to see stagnation in housing prices in many places. Look at Florida. Florida has stagnated, and you're seeing pockets in Florida. You're even seeing pockets. I live, an hour or more outside of Austin, but Austin has stagnated. So you're seeing a lot of these hot markets cool down, and you're seeing some price drops. You're seeing more supply come onto the market. So you're starting to see deflation. And I mean, all it would take would be a week or 2 weeks or a month of equity markets around the world collapsing. And I mean, you could easily see a 20% drop in a month's time across the board. Well, let me take that back. If you see across the board a 20% drop, then you're going to see derivatives affected. Some of them blow up, and it would probably be, a complete disaster. But if you go back to last July or August, I forget when it was, the Japanese market, the Nikkei average was down 25% in 3 days. Now, is that was that deflationary? Yeah, if it persisted, it was. I think that's exactly what we're going to see is continuing inflation of the things we need, deflation of the things we have, and now they've added another wild card of tariffs. And I don't think people really understand. There's a lot of stuff that we don't make in the United States. And if we tariff them and raise the tariffs higher and raise the tariffs higher, a lot of products are not going to show up. There's going to be shortages of many things that we need.
I was going to ask, before you'd hear a lot of us in the YouTube space, talking about black swans, here and there. We don't hear much of those anymore, the black swan. So I guess I thought I'd ask you, where have they gone? Have they came at us one by one, event by event, and kind of swam on by, or they're still kind of building up in some ways, like you said, with the inflation, the things we need, and other things as well, the economy?
I'm not sure what the term I would use. I guess I would say that, we've had things happen. There would have been huge black swans 20 years ago when people were thinking right. But people have been so desensitized and so bombarded with news day after day after day after day that what would have been a huge black swan and people would have freaked out and go, oh my God, did you see that? Now it's like, oh, well, just add that to the list. So I don't think that the black swans have evaporated and gone away. I think it's the perception of these events has changed.